What's up, everybody? How's it going? Welcome to the DubDigital weekly live stream. 1 second. Hold on. What do I got here? 1 second. Dub is the man. Crypto Rain, how's it going, man? Good to see you. Thanks for stopping by. If you guys don't know who Crypto Rain is, friend of the channel. He also has a channel. We've been going back when Chain Fiends back in the day. How's it going, man? In Dub we trust. Tito, thank you very much. I appreciate you. Good day. How's it going, bro? And Blind Dave is listening. Guys, Blind Dave, OG, follower to the channel. OG, crypto OG as well. He has a channel as well. I'm all about spreading that love, spreading that goodness all over. Go check his channel out. He has something called Hash It Out, which I believe you do once a week or something like that, right? Where he has some cool crypto influencers, cool crypto people, OGs, people seasoned in the space, come through and share their experience and talk about interesting topics. I was on there last week. It was a lot of fun. Thanks for having me, bro. 11 people. Wow. Man, it's been a minute. Lifestyle. How's it going, bro? How's it going? How's Nevada? Still wearing your merch, homie. Thank you. I got it all designed up. I have merch. I got merch. It's good merch too. I'm in a new environment. Some of you can't tell, I'm getting some of my my old viewers back, which I really appreciate. It's been too long. It's been a long bear market. Things are starting to turn around. For those of you who are new, and I think I have a few new subscribers, which is great. Always love it when the fam gets bigger. I do this twice a week, Tuesdays and Thursdays at noon Pacific Standard Time. Sorry, I'm a little late on this one. We do what we can. We do what we can. And those of you who are just tuning in again for first time in a long time, I'm kind of switching it up. We're doing more higher arching topics where we talk on like crypto topics, less charting, because you know what? When number go down, people don't care about charting. This is more sustainable. This is more sustainable for myself, energy-wise and content-wise. Hopefully, you guys understand. Damn, you remember where I'm at? You the man. Still haven't sold, only bigger bags. There you go. Yeah, man, you're in real estate, right? Or loans, underwriting loans. I got a memory. This is a family for first and foremost, guys. Top DeFi picks? Question mark. We'll talk about it today. Just to get right into it, the topic of the conversation today is going to be institutional DeFi. Institutional DeFi. You might not have heard much about it, but that's why you follow this channel. I try to keep you ahead of the news, ahead of the trends, so you can capitalize and not just try to catch up. Was fun setting up Thursday 4 Central. Cool, man. It's definitely a good time. I love talking to crypto OGs. It's always good because nowadays it's hard to find crypto OGs, man. But let's get into it real quick. Institutional DeFi. This is going to be a trend that not a lot of people are talking about. A lot of people are just talking about the Bitcoin craze, and the Bitcoin's the only thing. We've heard that before. Bitcoin maxis out here, bragging and all this stuff about how Bitcoin is the new paradigm. It's the only one that matters, yada, yada, yada. But we all know this is just the natural progression of a crypto bull market. Bitcoin rises in dominance. Bitcoin rises in price. Everything lags. Maxis freak out, start laughing, bragging, but then all coins catch up. Because think about it, right? Institutions are just made up of people. Institutions are they're not special in terms of how they think because they're made up of people and human minds, okay? They're going to get some taste of that Bitcoin goodness, that Bitcoin rocket fuel. They're going to love it so much. They're going to have all these profits, and they're going to look into the crypto ecosystem that's also going to be popping off, saying, what else can we dip our toe into? This is dope. They're going to be looking all around, trying to get, bigger gains than they got in Bitcoin. Greed is not an exception to institutions. And not just it's greed oriented. Greed is the reason they'll be more willing to spread their money around. But then they'll actually look and say, wow, I have all these crypto assets. Like I have all these big holdings. How can I generate yield? Because institutions have like they need to have a return. They need to give their their board a return, a quarterly return. Bitcoin is great for capital preservation, but capital preservation isn't like necessarily the sexiest thing on Wall Street. It's all about I'm already rich. How do I extend my wealth so my capital never disappears? They want that yield. That's why treasury bonds are a thing. That's why all the hedge funds are buying up all the single resident real estate in the United States because they want that yield. They want that rent. They want a return on their investment, that ROI, return on investment. So basically, they're going to be looking at a DeFi because once they get into Bitcoin, then that's what do you call it? Their hesitancy to enter the crypto space is gone. They're already in and they're looking around and they want to get more offensive, get that yield, spread that money around, get a return. And some of the most attractive returns are in crypto. Yeah, rents are cool. You know, that's cool. That's just consistent. But like, where else are you going to get 20% APR, 10% APR just by holding your money? In Coinbase, you could hold USDC and get 5%. Now, I do understand that like Coinbase isn't FDIC insured yet, but you get what I'm saying. It's literally the easiest way. And the reason people might be moving away from the treasury bond is the bonds aren't like the healthiest market in the room right now. Everyone's used to running into bonds to get a guaranteed yield, but countries around the world have been selling U.S. bonds. The bond market just went through one of the biggest routes in bond market history over the last 2 years, over the last year. It's not exactly setting the world on fire, and the world doesn't exactly have a whole bunch of confidence in it. Bonds are only as valuable as the world is confident in them and the issuing nation to pay it back, right? So at least in crypto, you can get bond-like yields or even better in a decentralized way, depending on how you use it, decentralized way, right? Because there's going to be all these quasi-crypto lending services that pop up to say that we're using decentralized money to get yield, but then they take it, rehypothecate it, and they sell it, they invest it. That's what happened to FTX. But I think there's going to be a turn to true decentralized DeFi. And institutions are going to start learning how to operate within that. You know what I'm saying? And there's a bunch of ways. But before I get into the rest of the ways, let me catch up. How you guys feeling? Backed up the truck on XPRT and XTZ. Tight. Yeah, I still got my bags on those two. Actually managing a department of the same bank, moving up a bit. LOL. Good, bro. Awesome. I'm happy for you. I'm happy when the family wins. Tell it as like it is, bro. Xavier was also on Hash It Out with me. Very, very smart crypto mind in the space. Go check him out as well. I know you have a X account. I think do you post videos on YouTube, Xavier? I'm not sure. If he does, go check it out. What do you know about Red Belly? I don't know. What do you know about Red Belly? Not sure. Speaking of Wall Street, I saw NASDAQ talking about blockchain 2 years ago, plus ago. So I'm sure they have been quietly accumulating. Yeah. This is not their first foray. You know, like maybe companies and institutions don't own crypto directly on their balance sheet, but that does not mean the people within their companies don't. That doesn't mean that their shell companies don't. That doesn't mean their subsidiaries don't. You know what I'm saying? Like maybe on the business balance sheet, they don't exactly directly hold it, but they might own shares in Bitcoin mining companies. It's called indirect leverage. Indirect leverage is basically a company getting exposure to an underlying price of an asset without actually holding the asset because of regulatory concerns, non-approval by boards to hold certain assets, so on and so forth. But they do own mining companies. They will own like hardware wallet manufacturers. They will own commodities that are used to create those hardware wallets and support Bitcoin mining. That's called indirect exposure. So I guarantee you, JP Morgan has indirect exposure to Bitcoin in a way, some way or another. I guarantee you all these companies do, because they're not going to wait. They're not going to get left out completely. You know what I mean? 8 people, what's up? Finally catching alive. Missed you, man. Missed you too. It's really impressive that you're a dog that can drive a car. Wow. And I'm just a human who could barely drive a car. Rent, cool. But yielding BTC for profits with no tenants, sign me up. Yeah. You know, we see a big move of institutional landlords now because rents were going up. I think they're cooling off a little bit now, but they were going up. It was the hottest thing. Buy a house, get the rent, but rent and being a landlord comes with a bunch of challenges. Okay. Just look a couple years back in the pandemic, there was a eviction moratorium where you couldn't evict tenants who were not paying. You could not evict tenants who were trashing your place. I even lived by some. They couldn't evict them. And it was the wildest thing. And basically, if your tenant wasn't paying while some were, some weren't, you basically still were on the hook to pay your loan to the bank, your mortgage to the bank, if you didn't own outright. That's a risk. And we're probably going to see more and more as times get hard, more and more mandates from the government protecting renters. But who does that screw on the back end? The landlord. And you got to know, not all landlords are huge monolithic people. Like they might own 1, 2 units, 4 units. It might be passed down by their grandparents. What that really did, that moratorium, was hurt the small landlord. Banks, hedge funds, they could eat that up all day. It can go years and years and years. They don't care. They got other yielding assets and investments. But that's something to worry about. You know, infestations, that's something to worry about. There's all these human related life problems being a landlord. It's not really exactly easy money. Imagine being a hedge fund, being an institution who could just hold BTC in your wallet digitally or some other digital asset digitally. You don't ever got to worry about the freaking ETH not paying you on time. You don't ever got to worry about it bringing in bed bugs and affecting your whole apartment. You don't ever have to worry about it leaving the gas on and blowing your investment up. These are things that practicality wise are just so much easier to get a yield from by holding digital assets. And then one thing also is a lot of people talk about JP Morgan to be a custodian for the United States government and custodying silver. That's more or less on the conspiratorial side of things, but they actually have one of the largest positions in U.S. history of physical silver. So basically, do you know how much money that costs every month to house it, to run a facility, to guard it? It's insane. It would be very beneficial for a large institution to just hold a digital asset. But see, all that silver that they have physically, they're getting no yield on it. None. Billions of dollars sitting in the warehouse that they have to spend millions of dollars to secure every single month. Instead of it being a cost to you, it could be a income generating asset just by switching it from physical to digital. Do you see why institutional adoption of DeFi is not a question of if, but when? Because it makes sense for the institutions to do it. Guys, just to give you some pro tip, if you want to find like something that's going to catch on, an emerging trend in life, in the world, all you have to do is look at things from the standpoint of why people would want it and who would want it. The same reason you probably would prefer Bitcoin over gold if you didn't have a place to put it. It's probably the same reason the bank would want it. It's probably the same reason a family office would want it. We're all people and we all suffer the same problems and trials and tribulations. You know what I mean? Yep. Let's see. Bonds are trash. It is you. Is it US bonds? Yeah, US bonds. Look, US bonds are basically debt. The reason US bonds have been considered like the safest type of government bond in existence right now is because we have the world reserve currency. We technically cannot default because we can just print. Not every country can do that, right? So every other country more or less has a greater chance of default in that from that standpoint. But we've ran up the debt so high, we basically our GDP is paying like a large portion of our GDP is just paying the debt payments on the debt. It's starting to get a runaway. You know how you buy a credit card or you have a credit card and you buy things, and for the long time you're paying off in full, paying off in full. Then a big thing happens in your life. You got to cover with a credit card, and then you don't pay it off in full, and then that principal that you're well, not the principal, but the interest is just growing and growing and growing, and it's getting out of control. That interest rate's starting to make that amount you owe bigger and bigger every single month. United States is on that threshold of where it's starting to get uncomfortable. It's starting to run away from them. So that's why every fiat currency has collapsed all over the world all the time whenever it shows up, all the way back into ancient China. Because if you rely on the expansion of debt, eventually the debt overcomes you and you collapse under its own weight. No channel, just listening to the smart guy like you and Blind Dave's. Okay, man, you should have one, man. You should get one. That'd be great. I'll have you on the channel one day. How about that? Would you be down? Hey, man, I subscribed to your channel when you had 30 subscribers last cycle talking about WAN. Good to know you still here. Felipe, I'm still here. Thanks for showing up again. I appreciate it. And I'm still talking about WAN. Actually, I'm making videos with WAN now on their channel. I just did an interview with a new DApp builder on WAN chain. It's a metaverse 2D game map type game. It's called Dega Realms. Go check it out. It just got published on WAN Chain's YouTube channel today. BTC easier to hide, especially when the government comes knocking. Before you roll your eyes in the chat, it has happened once. Yep. He's talking about the gold confiscation that occurred in the United States after the Great Depression, I believe. Yeah. So basically, I think it was voluntary. I don't think they went house to house, but they told everyone that holding gold was illegal. You could no longer hold gold as a private citizen of the United States. And they issued a date of which you had to return your gold in and you'd be paid at the going market price. At that time, the going market price of gold was $25 an ounce. Just want to highlight how much purchasing power the United States dollar has lost over that time. $25 an ounce for a piece of gold. Could you imagine that? Then, I don't think it was the next day, but very shortly after, the government turned around and he revalued gold to $35 an ounce. Mind you, not everyone listened to that mandate. There was families who still hid their gold. And overnight, they enjoyed the crazy price appreciation that occurred by disobeying the government's rules. And what lifestyle is getting at is that at some point, they will also probably come for your crypto. But sucks to be them. It's even harder to get crypto unless you comply. But hey, that's up to you. I ain't never going to tell you what to do. Speaking of WAN, what's happening to WASP? I don't know. I got a lot of WASP because I believe DEXs are the focal point of economic activity within chains. If you want to swap between any of the assets within the within the ecosystem, you have to go through a DEX. There's not that many DEXs on WAN chain. So that means you have even less amount of chances to be wrong. There's only 2 right now, I think. RexDex and WANSwap. And RexDex is friend of mine's actually that I met through YouTube. Pretty cool. I have an interview with him as well. His name is I'm Red Ryan. Go check it out. 12 people. But let's get back on the matter of hand, guys. Let's go back to the topic of the conversation today, which is institutional DeFi. So I explained at a higher level why institutions would be interested in participating in DeFi. That ROI, return on investment, it's huge within Wall Street. They don't really look at Bitcoin the way we do. right? Individuals want to stop the degradation of their purchasing power through rampant inflation. While that's to some extent what Wall Street wants to do, they want to post good numbers. They want to show that they're effective. They're good stewards of money and money managers. Because if they're not good stewards of money and money managers, why do they exist? You might as well just go put your money in Bitcoin and call it a day. They're going to want to be interested in the new alpha, the biggest returns. They want to be in it. They want to be all in it. They probably even want to try to own it. And with that said, there's some trends emerging in DeFi that I think institutions will be more willing to jump into. First one being the rise of tokenized assets or real world assets. We've talked about it a little bit before on the channel, but that's just an obvious one. Think about it. Think about some of the industries today that could benefit from it. What's one that comes up on top of your head? I think for me would be real estate. Think about the process it takes to buy real estate now. You have to go through a real estate agent licensed in your state or wherever you're at. They take 3% right off the top. There's inefficiency right there. Then there's a whole paperwork stuff back and forth. That's basically what you're giving 3% for to your real estate agent. That kind of slows down the velocity of which houses sell. It makes it more illiquid. Why don't you just put it on a DEX? Why don't you just tokenize it, put it in the digital world? And then not only are the people who just happen to see the way that the real estate agent is advertising in the local area, it's all up global. It's all over the place. Everyone everywhere can see that this house is on sale. It's located here. Why does selling real estate have to be a physical endeavor now, even though real estate inherently is physical? These are the things that are going to turn these industries on top of their heads. Another one I could think of is collectibles, obviously. And I've heard of a protocol doing that. I forgot what it was called. I'll ask some of my friends. But they're tokenizing Pokemon cards. That's amazing. Because one of the problems that really hurts the collectibles industry, while they do have value, and I'm a big fan of collectibles, especially Pokemon cards, it's illiquid. You have to find the person. That's the same thing that plagues fine art. You have to find someone willing to pay a crazy amount of money for this item. Well, not saying that it's not worth that, but sometimes you don't get what your collectible is worth because you fail to find the person who's willing to pay that price. Put it on the internet, and your reach goes 10, 100, 1,000 times wider, bringing up that velocity so it could trade much faster, making the item more liquid. And in fact, it might even sell for higher because now you might not just find one interested party. You might find 10, 100, 10,000, whatever it is. And that can go for fine art, Pokemon cards, Bayreuth trading cards, anything limited and finite in supply, and definitely antiques and things of that nature. Lastly, one more thing. Well, actually, no, I'll end it there right now. I'll interface. Red Belly's compliant asset tokenization has solved $1 trillion problem. Using world's first technology, compliant asset tokenization improves access, liquidity, choice, and efficiency. Yeah, there's some protocols that have been trying to do this already. There's one on EOS. Damn. Where is the EOS homies when I need them? Escaping me, but like there's a tokenized platform protocol on almost every single chain. Another one is Proppy. That was probably the first one, the OG tokenized real estate project in 2017. I think they actually even successfully traded the first home on the blockchain, which was in Estonia. I think it was 2017. Yeah. They were a little ahead of their time. I don't know what's going on with them now, but there's more and more and more interested parties in tokenized real estate because it's going to be hot. Everyone knows it. It's just obvious. Another industry that can get disrupted by this is the car industry. This whole model with dealerships, localized dealerships spread out all over the place. They all have different pricing. They do different things and play price games with all their cars. You've probably suffered from it. You might even own a dealership. But if you do, I'm sorry, because tokenization is coming to cars and it's going to standardize the price more. And in fact, we're already starting to see Toyota make that switch, because the Toyota dealers in America have like notoriously upped the price from sticker price from the manufacturer, just because Toyotas are hard to get in the recent years. Toyota is already looking at the Tesla model and saying, we want to go direct to consumer because you're hurting our sales within America. And all they have to do is tokenize it. And then all you have to do is go on Toyota's website and you can see all the cars available. You buy a car, you receive an NFT, that car gets shipped to you. To get its receipt, you have to show the NFT, bada bing, bada boom. The NFT is inserted into the mix to reduce fraud. It will improve efficiency, it will reduce price, all of these things. The only bad side is it'll probably hurt the local economy, but is Toyota responsible for that? Not sure. Let's see. Community gives value. This is true. We talked about it a bunch. I talked about it a bunch. If you guys don't follow me on X, please make sure to do so. Let me show my X account really quick. Bada bing, bada boom, there it is. And I'm posting a lot of short content now. Just trying it out. There's got to be a way to crack this YouTube thing. And I'm trying to find it. Please be, patient with me. I'm trying to figure it out. See what's the sweet spot. But I talk about it a lot and talk about why meme coins are valuable. If some of you know, I used to be a meme coin hater. We all evolve throughout our time on Earth, I would say. But then I really thought about it. And meme coins are valuable because of the network it provides, the network effect it provides, and the community that it fosters. That's why a lot of people hate on meme coins. They don't really understand why blockchains are valued. It's somewhat about the tech, but it's more about the group, the collective, the people willing to participate. Because there's 1,000,001 social networks out there. There's a bunch of them we ain't never heard of. There's a bunch of them that never take off. The ones that have staying power, and the ones that stick around are the ones that are used the most, the ones that are participated in the most. The same is in blockchains, the same are in meme coins, So like, that's why, if you guys know, I'm a fan of what people have coined dino coins, older coins from older cycles. Because Dab Master, I don't think, is here, but he talks about it a lot. Time on chain matters. Because the amount of time you're on chain, the more secure your network gets, the more decentralized it gets, the more distributed in mining power, the more distributed in community, the more distributed in token holdings. It just, think about it like a concentration of like a gas in an open space. Let's try to think about it in terms of physics. If you release like a concentrated amount of gas in a space, the law of diffusion wants to spread out into less saturated areas. That's what happens with like a blockchain once it gets introduced on chain. It starts spreading out and like kind of diffusing into the environment. And you'll see that decentralization gives resiliency. Decentralization gives staying power. The longer something's been around, as many bear markets as it's been through, it gives people more confidence that it's not just going to be a flash in the pan rug pull. It's going to give people the understanding that this is going to be here. And in fact, look at these. I think centralization is starting to get a bad rap. FTX, Celsius Network. Who wants to be in a centralized system now? And the biggest centralized system is the US dollar. Who wants to be part of that? Where they make unilateral decisions for you. You don't get to participate in any of the governance. It's trash. And I think the world's starting to realize that it's trash. But you cannot fake time on chain. You cannot. DubDino, Dino. Yeah, I know. I'm getting old, man. I'm starting to get gray hairs. It is what it is. I'm still holding some Veritasium. Me too. I still got some Very. Can you buy it anywhere? I know the Blind Dave said you could from like some kind of Ether Delta fork. I bought my first Veritasium on Ether Delta. That's how you know I've been around. If you know what Veritasium is or Ether Delta is, that's legit. Ether Delta was the jankiest DEX in the world. It was, I was on, I was like, hey, babe, should I be trading on this? But I'm a DJ at heart, guys. 14 people, what's up? Say hi, please. I want to meet the new people. Say hi to the old ones. Red Belly is the infrastructure on which companies can build products and services around both real world and digital assets. Red Belly bridges the current regulated economies with the forthcoming Web3 eco. What blockchain is it on? I'm interested. Sounds cool. Hold a little Very too. Yep. I mean, the Veritasium, guys who don't know, Veritasium was a small altcoin, and they actually hold the provisional patent for DeFi, and it was on Bitcoin DeFi. Reggie Middleton did it first, and for some reason, the SEC was the first coin the SEC cracked down on was Veritasium, and it was like so wild to me. I couldn't believe it because, you know, guys, powers that be like to fight things that challenge their authority the most. And they just seem to come down so hard on this small little coin. I couldn't believe it. I bought that thing and then they did that. And I was like, just my freaking luck. I was driving to work. I was reading crypto news on my phone. Don't judge me. And then I saw that and I was like, you know, like out of all these damn coins, they picked Very. But it's okay. Because they did that, I know I'm doing something right. I know we're doing something right. And he was awarded the provisional patent, I think, last year. Something to keep your eye on. I just don't know where to buy more. I want to buy more. I'm that kind of guy. Someone's attacking it. They're coming down hard on it. I want more, not less. I use Ether Delta. First DeFi application on Ethereum, I think. Then migrated to IDEX. Ether Delta was janky, wasn't it? Hey, DEXs look so much more beautiful now. And that's why I think people new to crypto, they don't really understand how good they got it. I mean, remember the ICO craze? You were sending that stuff to like some random address. You were hoping you get something back. Sometimes you didn't, sometimes you did. It was wild. Now we have smart contracts that get audited and stuff. And sometimes, you know, it's not the best audit. And sometimes there's a hack and this and that. But it is nothing compared to what we had to go through back in the day. Nothing. Very on Mercatox. Withdrawal cost 0.8 Very. Mercatox. You can still buy. Have you bought recently, Blind Dave? I tried. I checked it out. It wasn't letting me previously. But yeah, I'm all about buying things that get attacked. Maybe it's a fault of mine. You know, I'm not perfect. Red Belly is its own layer 1, currently in testnet. Jan 2024 mainnet. Building since 2016. Connected to powers that shouldn't be. LOL. I've never heard of it, man. I have to check it out. Definitely have to check that out. But moving on, let's get into another trend I see emerging for institutional DeFi. Yeah, the regulatory landscape is starting to lighten up. So basically, the main drawback in the participation in DeFi by institutions has obviously been a lack of regulatory clarity. But with the introduction of Bitcoin ETFs, regulations will have to soon follow, right? Because they're basically opening up Bitcoin exposure and crypto exposure to people who have 401ks. 401ks and pension funds are not going to accept these things into their basket of investments if it's not like regulatorily allowed. You understand what I'm saying? So basically, the ETF is the consumer product. It's a consumer product, right? And the regulations are going to follow. And once regulations follow, then all these things become possible that were not possible before. And then a lot of people are going to say, of course, I knew this was coming. You know how it goes. But yeah, the regulatory landscape is going to swiftly follow the ETF release. That is my belief. I think one of the main things one item that I think is going to become very prevalent for institutions is going to be decentralized borrowing and lending. Because it costs more and more money now to get money. The cost of money has gone up with the rising interest rates. Any way to eke out any cost to make it more attractive for people to borrow is probably what we want to do. Collateralize crypto lending by institutions. And I think institutions will primarily be the lenders. So basically, they'll be using smart contracts to get collateralizations from lenders, because right now, the way they lend money is pretty risky. And the bank gets caught holding the bag all the time when someone doesn't pay their car payment, when someone gets evicted, from their home. They have to sell these distressed assets, normally pennies on the dollar, because these are credit-based loans. It's based off their person's credit score, but sometimes life happens and you can't pay things back. And when that happens, guess who lent that person who borrowed the money all the money? The bank. Banks are probably tired of getting screwed. So it's much better to offer a collateralized loan through JP Morgan, through Bank of America, through a traditional bank. You post an amount of collateral that they require, you maintain the collateralization ratio, and everything's fine. If your collateralization goes below the requirement, they'll margin call you and ask you to add more assets. And if you don't, they collapse the loan, they get made whole, and you get to keep whatever you bought, and they get to keep your crypto or the cash value of it. The reason these credit-based loans are a problem is because when there's a big downturn in the economy, usually a lot of people stop paying their loans. Like if there's a recession, a bunch of people stop paying their car loans. And then that amount that the bank owes starts to rack up very quickly. It can even cause problems within our banking system. It could even cause the banking system to collapse if enough of those defaults happen at the same time. So I could just see that crypto's already doing it in a better way. All that has to happen is traditional services to adopt them like we have. And I think that's coming. What happened to PPT and PPP? I still got PPT, Xavier. I still got PPT. So if you guys don't know, the whole thing with PPT, it was an early altcoin in 2016, 2017. That was doing decentralized loans. Decentralized loans mainly for businesses. It was targeted towards businesses because a lot of the time small businesses have cash flow issues. They don't get paid by their customer by this date, but the light bill is due before then. So they have to get access to liquidity to cover it, and then they get the money from their customer. They close the loan, things of that nature. And I always thought it was a great idea, right? Decentralized small business loans, because necessarily large businesses don't suffer those problems. They have enough cash flow and reserves to handle those small things, but small businesses really don't. So you could loan money, and this is the whole PPT's thing. You could loan money to small businesses for a small interest rate and then make money that way. The business wins by covering their obligations. You win by getting compensated accordingly. Thought it was a beautiful model. Not sure what happened to them though. 13 people. What's up? I bought very on Mercantox. Recently? I'm down. Oh yeah, we talked about that. Can buy Very through 1 inch. Oh, you can? Wow. I like Very. That's sick. That's sick. How about Stacks? Bitcoin layer 2. There's one meme that is getting some attention there, and the whole network is congested. Stacks. Is that a project? Sorry. Is it a project? I'm not sure what you're saying, Felipe. But yeah, I think you're getting at like how Bitcoin's blockchain can't really handle a whole bunch of like throughput and stuff. I mean, let's be honest, it wasn't developed for that. The narrative shifted for BTC at least to digital gold. You don't really move gold around that much. It's more of a capital preservation asset. If anything, that's more what BCH is doing, but everyone hates BCH. No offense to BCH, but let's be real. Like, it gets a lot of hate. Gets a lot of hate. I mean, per the white paper, they said Bitcoin was peer-to-peer digital cash. I must be missing something. I don't know. I won't get into it. That's all like controversial. Do you think that if Satoshi Nakamoto lives, he would like meme coins? I don't know. Maybe. Who doesn't like meme coins though? See, that's the thing. Like, who doesn't really like meme coins? If you don't like meme coins, you just got to stick up your butt. You know, like, come on, man. It's a joke. It's fun. It's funny it goes up. It's funny it goes up. See, the problem, people who are not liking meme coins, is they put too much money in meme coins and it goes down. Well, don't put that much money in meme coins. And then meme coins are a great experience. It's hilarious that a dog goes up and makes people makes people money. It's hilarious that Pepe goes up. The memes that come from them are hilarious. I think Satoshi Nakamoto probably would like them. It's hilarious. It's online culture. That's what memes are. Online culture is virility, and memes are virility in a nutshell. You know? I just think that it's the nature of people and traditional finance are getting more and more involved in the space to take things so seriously because they have to, right? Traditional finance takes their line of work so seriously because they don't want you to realize that you don't really need them. And you really don't really need them now, you know? But I love the whole fact, and that's why I got into crypto in the first place, is because this is a money that doesn't take itself so seriously. It was built out of the ashes of the 2008 financial crisis. It was built as an alternative and for a way for people to have financial autonomy again over their own lives. And the most beautiful part I loved about crypto is that it didn't care who you were, where you came from, what you knew. All it cared about is that you were here now. It doesn't matter. Like, early crypto adopters were from every single walk of life. There wasn't just one kind of color person. There wasn't one kind of profession. There wasn't like, you didn't have to have a certain IQ to be part of it. It was just a pure cyberpunk, decentralized, beautiful grassroots movement. And that is why I am in crypto. That's why I like BCH, because of haters. Be a contrarian. Yeah, I do have more BCH than BTC. I'll tell you guys that. Because what's so different about BCH? What is so different about Bitcoin Cash versus Bitcoin? Besides people's feelings about it, what's so different fundamentally? Let's talk about it. 21 million supply. It's faster finality. It's cheaper. It's accepted all over, like Asia. It's all accepted all over Africa. You just don't like the founder, huh? You just have like predispositions made up about it, huh? See, that's the thing. I tend to be that way. I tend to be more contrarian because, like, yeah, I'm wrong sometimes, but when I'm right, the payoff is much greater. And I'm all about asymmetric risk. If you guys don't know what asymmetric risk is, it's basically the downside is lower than the upside. Those are the kind of trades I want to be in. Things that have asymmetric risk. I want to win. I want to win hard. And if I lose, I want to lose a little. 12 people, what's up? Synther is an interoperable omni-chain liquid protocol that enables slippage-free cross-chain swaps using highly solvent and omni-chain synthetic assets, making bridges obsolete. Damn, man. My mouth hurts saying that. That's interesting. Omni-chain. Well, I mean, are they really obsolete though? Because, I mean, they're synthetic assets. So they're just representations of the underlying. Yeah, that works if everyone participates on one chain, but I think we're starting to see a world that has many chains. So like, if everyone in the whole world used one chain, then that could happen, right? But I don't know if that's the way the world's heading, but we'll see. I may be wrong. Stacks is a real layer 2 on Bitcoin. Upgrade next year will make things faster, but now it's really slow like BTC. Look, like Felipe, I'm gonna say this, not like trying to be confrontational. It's just that we got to talk about these things, right? Layer 2 on Bitcoin is kind of a oxymoron, right? Why does Bitcoin need a layer 2? Like why? Like look at Lightning Network. What the hell are they doing, man? I heard them talk at the first Litecoin summit in 2018. Have they made any progress? Like at all? Have they? I don't know. I mean, it'd be great and everything, but I just can't really understand, knowing from where Bitcoin was supposed to be to what it is today, why we need layer 2s for Bitcoin. Because you know what's going to happen, Felipe. You know what's going to happen. The layer 2s, who do you think is going to control these layer 2s? Layer 2s are inherently more centralized than layer 1s. Who do you think is going to control these things? Big banks. And I guarantee you, the big banks, they're probably going to come out with their own layer 2s, and they're probably going to be like way more snappy, way more with it, way more competent, because they have big boy capital. I can see it now. I just don't like to get cornered, and I might be wrong. Sometimes I'm wrong, guys. Like, don't think everything I say is gospel. We're just like talking things out so we could have when people have different opinions, it just benefits everyone, because then you could think from different points of the aisle, right? So I'm not fighting anyone here, but like, you get what I'm saying? The DeFi applications on Bitcoin layer 2 could be huge. Hey, Blind Dave and Xavier, I know you know about Very. How was that different from what Reggie's doing? Because I know he owns the provisional patent on DeFi on Bitcoin. Is it essentially layer 2? I didn't think it was, but maybe I'm wrong. I haven't really dug in as far as I probably should have. BCH, larger block size. BCH, real-time difficulty adjustment for DGB. BTC, 2-week difficulty adjustment. Yeah. Look, I think there are a bunch of use cases being fought for right now. Decentralized money and smart contracts, DeFi, yield aggregating, and yield generating kind of protocols. As far as decentralized money is concerned, I think UTXO blockchains kind of are going to win at that. And UTXO blockchains more or less are interoperable with themselves through the use of atomic swaps. That's why, BCH, BTC, Monero, Decred, Digibyte, all of these can be swapped interchangeably between each other without a centralized party. Centralized parties cannot stop atomic swaps. And that's why I think the fight for decentralized money is going to be a UTXO blockchain, right? That's the beauty of it, man. That's the beauty of crypto. Decentralization, having the ability to choose. There is not going to be one coin that rules them all. It was never set up for that. Thus, why Satoshi made it possible to fork Bitcoin. Because he knew people were going to come in and try to stranglehold it. Do you think they were just going to let this asset go to $1 million and people aren't going to try to come in here and control it? Of course. Forking is inherently decentralized culture. Forking. People hate it when it forks because they say it dilutes the supply of a coin. But it's the only thing that can really guarantee our sovereignty. You know what I mean? And that's why I'm not a coin maxi. I like lots of coins. Why can't I like lots of coins? Why can't we like multiple coins? Why can't we be parts of multiple communities? Because the second we keep fighting each other, the second we stop fighting each other is when we win. When you try to find a way around the traditional system all together and work in unison is when we win. The second we use crypto to each other directly and bypass exchanges in and off ramps is when we win. But of course, they want us to fight. Of course. Divide and conquer. 17 people, what's up? But yeah, another area that I think institutional money will be moving into DeFi and participating in a big way is like yield farming, right? An institution could set up a pool and it can pay an like a reward. They could pay pretty much a DAO token. Can you imagine them raising funds for the like a what do you call it? Like a multi-family housing complex, let's say 1 million, not 1 million, that's a lot. 100, 400, 500 apartment complex like community. And someone wants to build that. The bank opens a pool. And then decentralized money from all over the world wants to have a say in this pretty much this DAO, this apartment DAO. You put your money in, you get rewarded a percentage on this DAO. Your DAO coins are worth how well and how positively your DAO coins are worth how much the apartment complex is flourishing. If it does like badly, it can go down too. There's all these mechanisms that institutions can use, right? What's even better than funding an entrepreneur to build apartment complexes with your money, using other people's money? DeFi lets them do all these things. DeFi can help all these institutions do all the things they do cheaper, faster, more cost efficient. You just got to get a little creative. And they've tapped their creativity in the traditional world. They've done all these financial gymnastics. But they could do even more financial gymnastics in the digital world. And they can use even more money. They can use money from Asia. Well, of course, they're going to use they're probably going to geo-lock it somehow because of regulatory reasons. But you hear what I'm saying? All these things that weren't possible become possible. And then the investors appreciate it. Imagine you having ownership in one of the hottest apartment complexes in your downtown area. And then if it becomes even more popular, maybe that token starts paying a dividend. All these things become possible with DeFi. Guarantee you it's only a matter of time before institutions start to look at it. What else? Dad Master, what's good, fam? How's it going, Dad Master? We missed you, but we're glad you're here. Link sent on X, setting up. Oh, for sure. I'm invited again. Thank you, bro. If you guys want to catch me, I'll probably be over there today talking on live Blind Dave's Hash It Out episode. Very fun stuff. Go check it out if you'd like to. What else? Yeah, man, there's just a lot of things I was thinking about in terms of how institutions could participate. DAOs are interesting as well. We're starting to see those start to rise to prominence. For those who don't know, DAOs are decentralized autonomous organizations. And that's pretty much the way the world is going to move because money's getting harder to get. So if you can't get large amounts of money from a single source, you turn to many sources to get the same amount of money. One source doesn't want to give you lots of money. You get lots of little money from a bunch of sources. And when you do that, though, ownership and everyone wants to have a say in everything. DAOs allow companies to source funds in this way. DAOs allow hedge funds to source funds in this way, right? It's interesting. We're starting to see that definitely happen within the crypto space. I know Wyoming has been becoming a DAO haven within America. And one of the main, I guess you would say, benefits of a DAO is being autonomous. I think that's the future of crypto companies too, is to be actually set up DAOs, registered DAOs. A lot of them happening in Wyoming, like I said. But you know what happens when crypto companies start up? They look at, who's running this crypto company? Let's go get them. That's what happened to CZ, man. They came down hard on CZ because he was easy to pinpoint. They come hard down on XRP because they're easy to pinpoint. Who's coming down on Bitcoin? Where's Satoshi? That's why Satoshi is anonymous. Who's coming down on all these anonymous coins and projects? No one. You can't stop what you don't know or you can't see. And that's the way it's always going to be. The powers that be will always fight us. So you become a ghost. Do you think there is crypto in GTA 6? Probably. Some of those highlights in GTA 6 are wild. Man, it's crazy. I could only imagine how I was a kid had GTA 6. My GTA was like, didn't look like that. Whoa. The main characters, whoa. Let's see. What else is there, guys? Oh yeah, I would like to ask you. So in the everlasting journey to make better content and grow my following here on YouTube, I've been doing a lot more shorts because I saw that 20% of people watch the whole stream. And I know I got my ride or dies here all the time on the live, but most people don't catch most of what I'm saying. So I'm trying to do these shorts that are condensed. They have like an overarching topic. And I'm trying to find the best way to do that. That's the most palatable. I'm trying some with music, some without music. What do you guys think? Do you guys like hearing music on shorts? I'm trying to figure out short form. I'm not really like a TikTok dude, but I'm trying to get up to par now. So if you guys let me know, what do you think in terms of music? I'm a little confused on it. Do you like music in the shorts? Do you not? Do you like shorts? What do you think? I'm always open ears here. I'm trying to make better content. But yeah, that's basically what I'm seeing with institutional DeFi. Obviously, they're going to come in. It only makes sense. Whenever there's big yield, institutions want to find out how. And I'm not saying they're going to come in with their whole portfolios. They'll right size it accordingly. They'll manage your risk accordingly. Why wouldn't they? See, that's the thing. It's not that much of a risk. If they size it accordingly, they test it out. They see what's hot, what's not. They see what they like to do. They see what they want to get into. And then they start staging their move into it a little heavier, a little heavier. And then all of a sudden they open a protocol. And that protocol they come out with will have the biggest brand recognition. It will have heavy resources. Probably have some very talented devs that made it. It would be audited. All that, right? Like, they don't have to be first. They don't have to be the best. They have the biggest names. It's only a matter of time. They're not going to let Uniswap or they're not going to let these rando protocols just have corner the market and get all of the yield and be like the biggest names. Like you and I use Uniswap. But imagine when the JP Morgan swap comes out. Because not a lot of people know Uniswap like people in crypto do. But if you look at the whole world's population as a percentage, we are a tiny slice of that percentage. And when mass adoption happens, we will become even more a minority. So just know they're going to position themselves to benefit to the max. They're not going to leave this just alone. Your old WAN chain shorts were great. Reproduce that format. I had WAN chain shorts? What? Oh, I don't think it was WAN chain. Was it WAN chain? Like the little old lady strategy one? I didn't just make specific WAN chain ones, but I think I know what you're talking about. Yeah, I'll try to do that. That one had music in it though. Link sent. Oh my bad. Man, I think all of YouTube, people are kind of confused with shorts. YouTube's trying to fight TikTok, obviously, because TikTok's taking market share. It's kind of a little interesting, but I think there's something there. I think there's something to YouTube Shorts. And in terms of the content I'm making now, it makes a lot of sense. It lets me, interface with you guys more, be more consistent. It also just kind of doubles down on this kind of content because I know not a lot of people don't have the attention span nowadays to listen to an hour plus stream. I'm a weirdo. I love long form content. I eat it up all day, but these kids now, you got to kind of you got to meet them where they're at. 11 people. Well, that was great, guys. Any more questions before I go? I'm trying to keep it to an hour, but I'm having fun, and I really appreciate you guys joining me on the stream. It's been a journey doing this whole crypto thing. If you guys don't know, I started this channel in 2016. It wasn't even a crypto channel. It was a motivation channel. I would do motivation videos on my breaks at work and after work. I would stop by the park, I would do it in my car, and I realized people don't like motivation. They don't like to get motivated. So I took a break. And then I started doing crypto after I quit my job in aerospace. And it's been interesting ever since. I'm working in the industry because of this YouTube channel. I met a lot of cool people because of this YouTube channel. I've met a lot of founders, a lot of investors, a lot of crypto bros, OGs, just everyone. And I'm really thankful for this channel and the community that I've fostered. I'm thankful that you guys keep showing up week in and week out, even when I gotta take a mental health break, because people get really mean in the bear market. I'm like, I ain't gotta deal with this. Yeah, it was great. You really showed off your intelligence. Thank you. Thank you. Appreciate it. Sup, Dub? What is up? How are you? Long time. Look at Tectum when you get offline. Okay, we'll do. There's the last live. This is the last live of the year. Happy New Year's. We love you. Oh, it's the last live of the year? Damn, I forgot. Guys, I've been so busy. It is the last live of the year. Shoot. I might do. Well, I gotta ask my girl what we're doing for New Year's. But if I'm not doing anything, I might do a stream. I might do a New Year's live stream. That'd be fun. But let me check with the missus first, because sometimes she doesn't like some of my ideas. Love you, babe. Don't stop making these videos. I won't. They're fun. They're fun. And yeah, as the crypto bull market gets going, there might be more people here, and it might be harder to interface with you guys. I'll figure it out. We'll figure it out though. But for the time being, you guys are real ones for being in crypto right now. It's not exactly sexy. At a point, it's going to get really sexy. At a point, your friends are going to text you and tell you, "Oh, what's up with this and that? Is it too late to get in?" And then they'll start like coping really hard by saying, "It's not too late. I'm early. I'm early." And you're going to say, "No, you're not." And they're going to say, "Yes, I am." And they're going to buy, and they're going to hate you because the price dumps. It's just the same thing I've seen 3 times now. I'm going on my 4th time. Just know, as crazy as the space will get, as hot crypto will be, know that you were on the ground floor, you're closer to the knowledge, and stay involved in crypto no matter how hard it hurts, how much it hurts. Because knowing more is an edge. That's alpha. You know how confusing it is to probably walk into a crypto bull market and you think crypto only goes up? It's probably confusing as hell, and you probably really think that. You probably really believe that. But in crypto, there's the good and the bad. And you earn the good by going through the bad. Only by going through the bad is knowing how good you have it at the top. But it's all been a learning experience. Happy New Year. Happy wife, happy life. Man, she always tells me that. Is that true? Happy new 2024 to the moon. Yo, generational talent. We were talking about EOS. What is the protocol on EOS that has fractionalized assets? Chentai? You know what I'm talking about. I know you know what I'm talking about. Crypto can fry you. Crypto can really fry you. It is an emotional roller coaster, especially if you want to stay involved in the space and keep your eyes to the news. It's hard to look at the chart go down every single day. It's hard. But just know that there's a payoff that's greater than money. It is right here. If you know the history of crypto, it's basically like it's like an edge you get over the market, right? Like, oh, Bitcoin's new paradigm. I heard that before. Oh, Bitcoin's new standard. I heard that before. Oh, get in before it takes off. Oh, that sounds like a FOMO indicator. That's why I talk about the Wall Street cheat sheet, guys. Make sure to check that out, understand that, study that. And I want you to be aware online. I want you to see how people talk. You don't got to fight anyone. You just have to look at like what they're saying. At what point, at what price, what are they saying? Right? Because at FTX, when that collapsed and we were down there at 15, 17,000, everyone was calling for $10,000, $3,000 Bitcoin. That happens every time. And right before we broke out of, we broke out of, what was it? 17,000, we did that one big run up. Everyone was doubting it. Then they ran up. Then they bought in. Then it came back a little bit. Then it hovered. People said this time's different. There's no longer going to be any exponential moves in Bitcoin. Then we broke up again. People start believing. It came back like to 42. They're doubting. Don't you see a pattern here? Bitcoin is just emotions. It's navigating emotions. It's more important understanding your emotions than the price charts, because the emotions make price charts. You want to understand the most core fundamental pillar of crypto investing, which is people. People make markets. People are willing to buy or sell. That's what a price chart is. If you can understand how people sound at certain parts of the market, it can tell you what part of the market you're at. I knew it, man. Thank you. Chintai Network. Chintai Network, I talked about them last cycle. They're doing tokenized assets on EOS. I think they own a hotel in San Diego and a few other things, a bunch of other things probably. I haven't followed up for like a year plus, but go check them out. Gonna blow. It's back out. What? That's knowledge, baby. I try to drop knowledge where I can drop knowledge. Sometimes it's not always successful, but sometimes it is. Yeah, guys, that's about it. I try to keep these to 1 hour in length now. Thanks for joining me. The name's DubDigital. Just so you know, I have a X account. I also have YouTube. I don't know where you're joining me, but if you are an X, follow me on YouTube. If you're on YouTube, follow me on X. I also have a TikTok account, but I am failing like terribly over there. Whatever. I'm trying to get better. I do this twice a week, Tuesdays and Thursdays, noon Pacific Standard Time, which is 12 p.m. Follow me on X. That's where I let you guys know exactly when I'm going to be doing my my streams, and it's been fun. Institutional adoption of DeFi is coming. It's only a question of when they're feeling comfortable to do it. But I think once ETFs happen, and I think once regulatory clearance comes through, it's just obvious. It's just obvious, because this is the new financial market. This is the new financial system. Decentralized money is the new financial system. The banks know that. But until next time, guys, talk to you later. Peace.